Namaste. Today we are going to discuss about Securities Exchange Board of India, SEBI. SEBI is supposed to be the watchdog of the securities market. SEBI was started as an advisory body in the year 1988. It was supposed to be advising the companies in terms of financial regulations. It can only advise. Now, the companies did not take serious note of the advices provided by SEBI because SEBI was not empowered with punitive actions. Therefore, the companies did not take any serious note of any of the instructions given by SEBI. Therefore, in the year 1992, SEBI was made as a statutory body by which the SEBI is empowered with all punitive actions and disciplinary actions against the companies which are committing mistakes. Now, the purpose and role of SEBI, first one is to the issuers, that is the companies which are raising money. By SEBI, it is able to provide a marketplace for the issuers for raising funds in a very smooth manner. So, for the issuers of the shares and securities, raising funds became a very smooth job. Then, from the investor's point of view, providing authentic and reliable information, investors seek for authenticity of information before investing their money. So, to the investors, to protect the interest of the investors and rights of the investors by giving them authentic and accurate information. It is another purpose of establishing SEBI. Now, these two people are connected only by the intermediaries. So, to the intermediaries, a proper competitive edge and a professional competition is established by SEBI. So, ever-expanding market for the securities by which the intermediaries are able to play a good role in connecting the investors and the issuers. So, the role and purpose of SEBI is to provide a marketplace for the issuers for raising funds in a very smooth manner. To the investors, SEBI provides authentic and accurate information for them to decide to invest their money in proper channel. And the intermediaries who play a very vital role in connecting the issuer and the investor, ever expanding market is provided and a good competitive edge is being provided by which the intermediaries are able to channelize the funds from the investors to the issuers. Now, what are the objectives for which SEBI was established? SEBI is established basically for three purposes. Number one, to regulate the functioning of stock exchanges and develop a proper code of conduct for the functioning of securities market. Then, to protect the investors from all possible stock market fraudulent activities, and to prevent malpractices in securities market. These are the objectives for which SEBI was started. Now, the three functions performed by SEBI are broadly classified under regulatory functions, development functions, and protective functions. Under regulatory functions, SEBI regulates functioning of joint stock companies, functioning of stock exchanges, functioning of mutual funds, brokers, sub-brokers, portfolio managers, etc. So, regulatory functions of SEBI are registration of brokers and sub-brokers and other players, registration of collective investment schemes like mutual fund, etc. Then, regulation of stockbrokers, functioning of stockbrokers are continuously being monitored. SEBI undertakes inspection of stock exchanges, audit of stock exchanges to know how stock exchanges are functioning, and in case if there are violations, to impose punitive action and charge fees, levy fees for the mistakes that are being corrected. These are all the regulatory functions performed by SEBI. So, I repeat, regulatory functions of SEBI concentrates on regulating the functioning of stock market. So, it focuses on registration of brokers and sub-brokers like portfolio managers, merchant bankers, etc. Then registration of collective investment schemes like mutual fund, etc. Then regulation of stockbrokers, functioning of stockbrokers. Then inspection and audit of stock exchanges, and to identify the companies which are committing mistakes, to correct them, impose penalty, impose punitive charges and levy fees for all these jobs. Fine, these are all coming under regulatory functions. Then comes the development function. So SEBI is trying to educate. SEBI is trying to educate the investors, intermediaries and the issuers. So to the intermediaries mainly, SEBI undertakes training of the intermediaries. Training of the intermediaries about the fair practice and good code of conduct. SEBI conducts research on the functioning of stock exchanges, stock market operations, etc. And SEBI takes all possible measures to develop capital market. Then, now coming to the last one is protective function. SEBI protects the investors in every possible way. So, SEBI prohibits insider trading. Insiders are the ones who have a close association with company, holding a good position and getting all first-hand information about the happenings in the company. These people, when they get the information about the bonus issue or any rights issue coming up, etc., using their capacity as an insider, try to influence the stock market. So, SEBI strongly protects the investors by prohibiting insider trading. Similarly, price rigging, unnecessarily inflating the prices or reducing the prices using their influence over the stock market, which is also prohibited by SEBI. Then, investor protection. So, educating the investors, releasing monthly journals on stock market operations, being aware about the rights and responsibilities of the investors, all these things are being done. And promotion of the ethical code of conduct and discipline in stock market practices is also one of the protective functions followed by SEBI. So I repeat, the functions of SEBI are broadly classified into three: regulatory functions, development functions and protective functions. Regulatory function focuses on regulating the functioning of stock exchanges, other stakeholders, etc., in which it focuses about regulation of the functioning of stock exchanges, registration of brokers, sub-brokers, then mutual funds, collective investment schemes, etc. Then registration of brokers, regulation of functioning of stock market, stock brokers, then inspection of stock exchanges, then for ensuring that the stock exchanges and the companies follow the financial norms properly, if not levying charge and punitive actions. The next one is development functions. SEBI tries to educate the investors and the intermediaries by conducting training programs for the intermediaries, training program for all the other stakeholders. Then SEBI constantly is conducting research on investor protection, investor development, healthy stock market functioning, etc. And SEBI also takes all possible measures to improve the functioning of capital market. That is why now you find a lot of changes in bid, takeover bids, etc. The next one is protective function. SEBI protects the interest of the investors. That is one of the objectives of SEBI. Now SEBI tries to protect the investors by prohibiting insider trading, price rigging. These are all malpractices or unfair trade practices. Then SEBI tries to protect the investors by educating them about their rights and responsibilities, how to invest and other details. And SEBI works for the promotion of code of conduct and the rules and regulations for the functioning of stock exchanges. So the whole thing comes under functioning of Securities and Exchange Board of India. Namaste.